Good morning, guys. So let us start with capital gain. So first of all, you have to take your own notes, your faculty notes with you, because I had not covered every line because I have to make my notes short and crisp for last 1.5 day revision. So I am just giving you some like from every small definition, and there are one or two words where ICAI plays the game in the exams, and I will tell you at from which point it will come in exam and how ICAI will interpret them. Okay, so first we will start with the definition of capital asset. Uh, from where the question will come? Question will ask from that exceptions that like all personal movable assets are not capital assets. Stock and trade are also not capital asset. It comes in MCQ that identify which one of them is a capital asset and which one of them are not capital asset. A good MCQ will come from like 4 to 6 marks that identify which is capital asset or not. So any stock and trade is not a capital asset. Any personal movable asset is not a capital asset, and any jewelry is not a personal asset. Okay, but I had write down some important adjustment which is not sometimes not covered in some faculty's book. So if all personal movable assets are not capital asset, but there are some exceptions. If car is used for business purpose, then it will arise capital gain. But because in some faculty books, what you will see that car, TV, and mobile are movable personal asset, so capital gain will not arise. But what you will gonna do this mistake? Question will ask, like IC will ask that this car is used for business use, and you are selling that asset. So capital gain will arise or not? That at that time. Capital gain will arise. Okay, so it is a header adjustment, so you have to mark it. Okay, and then exception: jewelry means ornaments and means gold, like gold, silver, and any precious metal. Okay, like if there and if like some precious metal, if it or any precious stone are also considered as jewelry. Okay, and the definition of jewelry, like precious stone, furniture, utensils are made up of, these are in the definition of jewelry, and this is a capital asset, and capital gain will rise from selling on those goods. Okay, then jewelry. Then how you have to remember this drawing paintings, because the artist takes so much time and takes so much effort. So whatever it is making, like any drawing, painting, sculpture, archaeology, collection, any work of art, it is not less than a jewelry for the artist, because it takes so much time, effort. So it is not less than a jewelry for them. Okay, and rural agriculture land, this is not a capital asset. General topic. Okay, and that rural agriculture land is not a capital asset, and but there is some exception. Okay, uh, exception in what if there are some criteria for this to identify that it is a rural agriculture land or not. So I had make it easy to remember this. Okay, wait a second. Wait, remember this. Okay, how you remember this? So what will be your stipend initially when you join a articleship? 10,000. And for what amount you want to do this articleship to reach at the 1 lakh rupees. Okay, so up to how many years you have to do this articleship? 2 years. So up to 2 kilometers it is a capital. Sorry, my bad, it is not a capital asset, like this is urban agriculture land. For example, see this, up to this it is urban agriculture land. If you are selling this urban agriculture land, this will be under capital, it will arise capital gain. And after this land, this is a whole rural agriculture land. If you are selling this, no capital gain will arise. But your population 1 lakh to 10 lakh, 1 lakh to 10 lakh means if you are earning 1 lakh per month, and if you want to earn 10 lakhs, sorry, if you want, if what you are earning 1 lakh. Okay, and what you have to do for earning 10 lakh per annum, 1 to 10 lakh, how you remember that? If you are earning 1 lakh per month. Okay, and sorry, if you are earning 1 lakh annually, and if you want to earn 10 lakh annually, what you are earning in articleship 1 lakh annually. For example, you have 8,000 or 9,000 stipend, and if you want to earn 1 lakh to 10 lakh per annum, so what you have to do? You have to complete your CA. And how much time it takes to become a CA? Approximately 6 years in general. Okay, and if you want to earn more than 10 lakh as a salary package, then how much you have to wait? 6 years to complete CA and 2 years of experience to earn on an average salary of more than 10 lakhs. So up to 8 years. So you have to consider it as 8 kilometers. I hope it is a good example to consider, as it is a urban agriculture land up to this area, 2, 6, and then 8. This is urban agriculture land depending on the population. And after this, all rural agriculture land up to this, it is treated as urban agricultural land. If you are selling this land, you will arise capital gain. After this land, it is all rural agricultural land, no capital gain will arise. And this is one most favorite adjustment of IC, that silver utensils, like you have a silver spoon for different occasion, and if you holding these utensils in the market, and if you had get any gain, so on this no capital gain will arise. Don't confuse that. It is to consider it in jewelry world. If you are, it is for personal, it is for personal effect, then no capital gain will arise. Okay. And then there is some list of short-term capital asset. Okay, like up to 22/7/2024. So how we will, there are 2 days, up to 2000, up to 22/7/2024, and up to after 23rd July 2024. ICAI had asked a question on this part, that up to 22/7/2024 there are some list for agent that it is short-term capital gain 12 months or 24 months or 36 months. You have to check before, you have to check for before 22 July 2024. There are two cases where there are 36 months. First is unlisted debenture and second one is other capital asset. Okay, there is 36 months, but it is after 20 on or after 23 July 2024. It will be a period of 24 months only for these two assets. And all other remaining will be same. You have to consider unlisted debenture, not listed debenture. Unlisted debenture, don't be confused in the exam. Okay, then computation, it is so easy for long-term capital and short-term capital asset. So for short-term capital gain, long-term capital gain. Long-term capital gain, you will get the indexation. In short-term capital gain, you will not get indexation if it is before 22nd July 2024. But it is on or after 23 July 2024, you will not get the benefit of indexation. Okay, and it will be available for the tax. It will available for the tax calculation of land and building only, and no any other capital asset. We will study in uh, uh, upcoming part. Okay, and then there is one more good adjustment. If long-term capital gain asset, if that long-term capital asset is land and building, then you have to separately then option for the indexation facility is available for the purpose of calculation of tax. For tax of long-term capital gain building without indexation, there is 12.5%, and tax on long-term capital gain of land and building after indexation 20%. If you get a question of land and building for calculation of capital gain, then you have to calculate the tax as per without indexation and with indexation. Okay, so you have to, for this, what you have to do, you have to attend the practice batch of Jasmeet sir. Okay, and then if asset is purchased on or before 1 April 2001, if asset is purchased before 1 April 2001, okay, so in that case, if that asset is land and building, then how you have to calculate this? Then how you find the cost of acquisition? If on first you have, what you have to take, actual cost. What was the actual cost for buying that asset? That is given in the question. Most favorite adjustment is there, that if there any brokerage fees is included, if brokerage fees is paid for acquiring that asset, that it has to be included in that cost of the asset. But if it is STT, means short security transaction tax for purchasing of the shares, then it will not form part of the share. Mark this adjustment or write it down in your provisions. Okay, then actual cost or lower of FMV or HTV for the purpose of land and building, because stamp duty value is only available for land and building now, not for other asset. Other asset does not have stamp duty value. Stamp duty value is of what? So land and building, and land and building, it is a common sense. For other asset, there is no stamp duty value by government. Okay, so what you have to take, lower of financial statement, FS, lower of financial statement का lower ले लेना. Okay, and then you have to compare with the actual cost. If actual cost is lower, then you have to take the and FME HDV lower is higher than the actual cost, because what that government wants that to, if you purchase land, purchase your asset at that time, then at least you have get the benefit of that. So if your cost of acquisition is high, so if your cost of acquisition is higher than their fair market value, then it is good now. It will take look less capital gain. Okay, and then come with the meaning of transfer. So what is meaning of transfer? Transfer, that I see favorite adjustment like sale exchange and relinquishment of asset. Relinquishment of asset means voluntary transfer of right of an asset, and extinguishment of an asset, it means like destruction of that asset or termination of lease, redemption of preference shares. So these are also transfer. And one more adjustment I see loves to us like conversion of asset into stock and trade, and if there is any maturity or redemption of zero coupon bond. So these are the favorite adjustment of many from the transfer. So first you have to identify this is a capital asset or not. What is its period of holding? That 12 months, 24 months, and 36 months. Okay, and then you have to consider think that this is a transfer or not as per provisions. Okay, and what is not transfer? I say will ask here. Okay, if you are gifting anyone, this is not a transfer. If you are inheriting any property from your grandfather, it is not a transfer of asset. If you are distributing capital asset in the partition of active, it is not a transfer, so no capital gain will arise. If you are converting bond debenture into shares, so it will not arise any capital gain. And what will, if you are converting then debentures into shares, then there is some cost of acquisition of share. Then cost of what will be the cost of acquisition? That cost of acquisition of share will be the cost of that part of the debenture which has been converted into shares. Basic understanding. And what will be the period of holding? You have not considered that period of holding from the date of conversion. You have to take that period of holding from the date of acquiring that debentures, because debentures are converted, and if you are selling them, so from the date of purchasing of that debenture which has converted into share, then period of holding will be taken of the debentures. This is the most favorite adjustment of ICAI. Okay, and then reverse mortgage. Reverse mortgage, it is a facility where senior citizen mortgage their property to the bank and receive some loan amount, and if senior citizens are not obligated to repay this loan, and bank recover principal amount by selling such house after the death of senior citizen. It is not important. You can you cannot even read, this will not come in the exam. Okay, and then come to conversion of asset into stock and trade. This is the most favorite I say question, a straightforward 5 marks question come in the exam. What you have to do there, what there will be the scenario that as there you have some capital asset you had put in the business, and then you have to sell it in a business as a stock. So what you have to take for the purpose of capital gain? Capital gain, when it will arise when SIT is sold, not when the date of conversion. There you have to make a proper timeline, and you have to think when capital gain will arise. Capital gain will arise when the asset is sold. Without asset sold, how you will even think that I will pay the capital gain when for the just conversion? When you have getting the profit, then you will pay some tax to the government. I have basic common understanding. Okay, then how you will calculate? First you have to calculate capital gain, then you can easily calculate the PGBP income. First let us calculate capital gain. The fair market value of date of conversion, this will be given in the question. What will the fair market value of date of conversion? And you have to minus the cost of asset or index cost of acquisition, whatever it is, a short-term capital asset or long-term capital asset, and you have to minus indexation cost of improvement as we are doing the other question. And then what you will get, long-term capital and short-term capital gain. Now question will arise in your mind while solving the question, that what will be the cost of acquisition of the stock which we are selling in the business. We have got this, question will give the sale value of this asset, but it will not provide the cost of asset. Then what will be the cost of asset, cost of stock? Okay, so this is a fair market value of date of conversion, that the value of the stock which we are converting into data. The value of that capital asset which is converted into stock, that will be the value of stock now. That will be the cost of stock. So you have to minus this fair market value of date of conversion. Then what will arise is PGBP income. It will be taxable under head PGBP. And then deemed cost of acquisition. If asset acquired by goodwill or will, if asset is acquired by goodwill or will, then what will be the cost? This will be the cost of asset of previous owner. This will I had marked this because it has come in any MCQ or like adjustment by ICAI. Okay, and what will be the period of holding? Period of holding of the previous owner who acquired the asset. Okay, then if there is any insurance claim you have received, these adjustments are come for like 2 to 3 marks, not more. Then it will come in the MCQ part. If when insurance claim is accepted, when insurance claim is received, what will be the sale consideration? Sale consideration, insurance compensation received. What it is a deemed transfer. When it is deemed transfer, insurance when a previous year of destruction. When the destruction is happen, that date will be the deemed date of transfer, and you have to calculate the capital gain on that year. Okay. Taxability. When will taxability will arise? Taxability will arise on receipt of money. When we receive the money, then we will pay the tax. Not when the date of on the date of transfer. We will tax when we got the money now. When we get the money, then we will pay the government the tax. Okay. If claim received in kind, if like you have to get another house in claim from the insurance company, then what will be the sale consideration? So sale consideration will so what will consideration that fair market value of such kind will be the full value of consideration. Okay. And then another topic, money forfeited. If money is forfeited on or before 1st April 2014, this will come in full-fledged question or MCQ. ICAI will almost in one or two attempts. Okay, back to back this adjustment will come. So what you have to do, you have to deduct from the cost of acquisition before indexation. If you have money forfeited, like you had done a contract and then you had that other party is not going to fulfill that contract terms and condition, and he is cancelling that contract, and then what you will do, you will forfeit the amount that he has paid you in for advance. Okay, so this will be the money forfeiture you have studied in the like shares. So if it is done after 1 April 2014, if it is before or on or before 1 April 2014, you have to deduct from cost of asset before indexation. And cost, you know now when it is done, when you are calculating the cost of asset or index cost of acquisition, you have to while actual cost of asset which we have calculated on 1 April 2001, then you have to deduct this amount also, and then you will get that cost of acquisition, and for index cost of acquisition you will get the cost of acquisition. Okay, this is the adjustment. Okay, then tax and if it is after 1 April 2014, then it has already taxed in income from other sources in that year. You have not to be taxed in this year. Mark this. Okay, you will, what you will gonna do, you will do that you like you will see I studied the tax. We have to tax away underhead income from other sources if money forfeited after 1 April 2014 and we are selling this asset. Don't do this mistake. It means that it has taxable in that year of forfeiture. Okay, then if capital asset to firm, if you are giving capital asset to firm, so what you have to do, if what will be the sale consideration? If capital asset I am giving to my firm, then what was the sale consideration? Capital contributed by partner. It means how much money I am at what price I am selling my asset to the firm. That will be my capital contribution. Basic understanding, logical, make logic. How it is sale consideration is the capital contribution by partner. This will be my capital contribution in the firm. And what will be the deemed transfer? What will be the deemed transfer? Value of capital asset recorded in firm book. This will be the deemed transfer when taxability will arise. Taxability arise in previous year in which capital asset is given to firm. Taxability will arise when I had given my asset to the firm and I get the share in the firm. Okay. If there is any case of compulsory acquisition on the topic, so if there is government acquire my property compulsorily, for this there is an like exemption also. So what will the full value of consideration when compensation is whatever the compensation will fix, this will be a full value of consideration. Taxability will arise on the initial compensation. Okay, it will arise when on the initial compensation received. This will be a taxability year, not on the okay. And if it is received on installment, if it is received in installment, what you have in the when you receive the first installment, entire capital gain will be taxable. And then question will arrive, full value of consideration transfer of land and building. Then how you calculate this full value of consideration? This is the most favorite adjustment and the most important adjustment, or like there are JK Shah cash flow. So this is section 50C or 43C. How we will calculate the full value of consideration? You have you have solved so many questions. If the full value of consideration is less than, or if that full value of consideration is more than SGB, then no problem. If that you are selling for your asset less than SGB, if you are selling, take logic, if you are selling at the lesser amount the government had determined, then what will government will take, that I settled this land and building cost at rupees 10 lakh in the market. Government determined that is SGB, and we are selling my asset at only 9.5 lakh. So government will take a, oh God, there is some, like, some catch. Why he is paying? He is hiding the tax of rupees 50,000, and the assessee will not want to pay the assessee will not want to pay this tax on this 50,000. So he is declaring some less amount. So for this purpose, government has come up with the section 53 and 43 CA. So if your sale consideration, if your SGB is equal to or more than 110% of sale consideration, so what will be the full value of consideration? That is your SGB. If full value of consideration of SGB is equal, then actual sales consideration will be a full value of consideration. Okay, I hope it will got you. And if you need more example, let me do in comment. What will the date of, if date of agreement, date of registration is different, so on which date we have to calculate? So if date of agreement is done, because for the indexation purpose you have to take some date na, otherwise how you will do the, like, indexation? So if date of agreement has done for the land and building, so, and how date of agreement you have meant to take date of agreement when advance has been received from specified mode, only that in date case you have to take date of agreement. And if specified, you have not received advance from specified mode, if you have received in cash or any unspecified mode, then you have to take date of registration. Okay, this is the most favorite I say tricky adjustment, you will forget in exam. Okay, so take a look twice on it. And where SSC claims that the SDV is more than the fair market value, where the SSC is, I am claiming that SDV is more than the fair market value of immovable property, that government had determined that 10 lakh and the fair market value is only like 9 lakh in the market. So SDV is not disputed, and we have to appeal to the assessing officer. So MCQ will come from this portion. So if a valuation officer see that it is the full value of consideration is exceeding SDV, then SDV will be the SDV. Full value of consideration will be SDV. If assessing officer say that the full value of consideration does not exceed SDV but exceed the sell value, it means that the it is not exceeding. For example, for in our example, it is 10 lakh SDV determined by government, and we are saying that fair market value is 9.5 lakh, but valuation officer is saying that it is 9.75 lakh. So what we have to take full value of consideration, this 9,75,000. Okay, I hope you got this adjustment. And sales valuation officer says that whatever the associate is saying is correct, so we have to take actual sales consideration at 9.5 lakh. So here 10 lakh, 10 lakh, 9.75 lakh. Okay, and here 9.5 lakh. Okay, I hope you got this. And capital gain in case of slum sale. Capital gain in case of slum sale. So how what will the full value of consideration? Because once you calculate full value of consideration, cost of acquisition, whole capital gain is ended. Okay, sale consideration of full market fair market value of capital asset, which is high. Capital gain, because you are selling your whole assets. Okay, in slum sale. Okay, so sale consideration of those assets or fair market value of capital asset, which is higher because the government wants to earn higher taxes. Okay, so this is the provision. What are sale consideration and fair market value of capital asset, which is higher, you have to take as full value of consideration. What will be the cost of asset? This is the most tricky adjustment. Okay, you have to first calculate the net worth of the unit. And what question will ask? You will see that revaluation. Then you have to trigger the slum, and this is the slum sale, because revaluation point always come in this slum sale. You have to calculate net worth without revaluation. Okay, mark this adjustment or write it out in your notebook. Okay, if stock is transferred, if you are transferring the stock, then it will arise PGBP. But if you are holding the stock of goods after 24 months, then it will arise capital gain. This is the favorite MCQ. You have to mark it in your notebook or whatever you are doing right now. And for this, no indexation is available. You have to take cost of acquisition. No indexation is available for slum sale, because there is not a particular asset are selling. You are selling the whole business. So slum sale, you are selling a large part of assets. Okay, so no indexation available. I have made a separate list on which indexation available, and where indexation is not available. Okay, and if what will be the cost of self-generated asset? Sometime maybe I will ask if there is any like brand name, tenancy right, goodwill, or any right to manufacture. If so, what will the cost of acquisition? Cost of this will always be nil. Okay, if asset is purchased, if you are purchasing just like tenancy right, you are purchasing right to manufacture, then that purchase price will be your cost of acquisition. But in case of goodwill or business or profession on which depreciation is claimed up to previous year 2019-20, then cost of acquisition of such goodwill would be purchase price as reduced by total amount of depreciation. Means if you had claimed a depreciation on that goodwill like amortization which say for the goodwill, so if it you are doing before 90 previous year 1920, then you have to deduct that amount of amortization from that goodwill for the purpose of cost of acquisition, and fair market value is ignored for the goodwill. Okay, and then we have to come with the capital gain in case of depreciable asset. We had studied in PGBP. Okay, and then most important straightforward 5 marks question, capital gain in case of share. There are ICAI will give 3 to 4 5 adjustment, and you have to answer this. What will the capital gain in case of original shares? Cost of asset, original shares, then actual cost. What will the actual cost of fair market value as on 2001? Fair market value, actual cost will not consider, we will consider brokerage, because you are studied in AS30, that we will consider brokerage link with AS30. We have take actual cost which is including the brokerage, but we will not include this security transaction tax for the purpose of actual cost of the shares and the fair market value as on 2001. Okay, you have to take whichever is higher. Okay, whichever is higher. And for the bonus shares you have not paid any amount, linked with AS30, cost of asset will be nil. But if the bonus share has received on or before 1 April 2001, government does not know about that it is a bonus share or not, then fair market value as on 1 April 2001 you have to consider for the bonus share. Always don't take bonus shares as nil, always take bonus shares cost as nil. But if it's purchased before 1 April 2001, always take FMB, or actual cost which is higher. Whatever the situation, if you are getting if date is mentioned that it is before 1 April 2001, always think about that actual cost and fair market value, or in case of land and building you have to take the SDV. But if there is right share, come to the A study. If there is any right share, so what will the cost of asset? Share purchase. If you are directly purchase the shares from the company in the right shares, so that will the cost of acquisition. If you are renouncing the share, what you will arise? That profit, like 10 rupees share I am selling to the third person at rupees 2, then I am earning that amount I transfer to the P&L in AS30, then that profit will be our short-term capital gain. That 2 rupees is a short-term capital gain. And what will be the cost of asset of the right now? Cost of asset, I am just selling to the third party at rupees 2, and then he is paying to company 10 rupees. What will be the cost? 12 rupees. So pay to the person for renouncing right, plus pay with whatever amount we had paid to company, 10 plus 2. Yeah, you are remembering A13. So this will have cost of right now shares. Okay, long-term capital gain under section 112A. Okay, so up to 22 July 2024, 10%, on or after 23 July 2024, 12.5%. If equity shares or equity oriented mutual fund are higher. Okay, if because there are some adjustment, you have to take the date 1 April 2018, because after this like short-term capital gain arise in the market and other provision which I will which you have also learned in detail in the classes, why this 1 April 2018. So what you have to do? Cost of asset or lower of so financial assistance, FA, lower of FA, financial assistance. Okay, financial assessment here, FA, lower of FA, fa that trending fa. Okay, that trending audio fa. So FA lower of fa, and fact. How you will remember this? There is one more like you can remember this fact. Lower of FAC, lower of FAC. Okay, then higher of this cost of asset, fair market value, and actual sales. How we will consider this fair market value? Whatever will be the highest price trending in the market as on when 1st April 2018, that will be the fair market value, and what are your actual sales value and cost of asset. This will by this you can calculate your cost of asset of equity oriented mutual fund. Okay, I hope it will be like something is remember you can remember. But for this, deduction under section 80C to 80 is not allowed and 87A not allowed. ICAI will ask you for the purpose of equity share, equity oriented mutual fund, because this is a 112A wala income. Deduction is not allowed under section 80C to 80A, and rebate under section 87A is not allowed, and for rest of the income including casual income rebate is allowed under section 87A. But in new regime only on normal income cap rebate is allowed. Even on the special income, casual income, rebate is not allowed as per amendment. Check that amendment or rebate. Okay, it is most important amendment. Okay, and short term capital gain on before 22 April 15%, after 20%. 80C to 80U rebate allowed. It is allowed because there is no like 1,25,000 of exemption is not available for this, so government allow the deduction and rebate. And in case of debentures, if converted into equity share, conversion is a transfer, but it is not, it will not arise any capital gain. If equity share received at the time of conversion, if your debentures are converted into equity share, but equity shares are received at the time of conversion, then capital gain will arise. Okay, cost of asset. What will be the cost of asset of those shares? That the cost of debentures or holding period of debentures. That will be the period of holding in cost of shares. Okay. For the purpose of zero coupon bonds, no indexation available. So these are the 5 items where no indexation is available. If it is a zero coupon bond, for debenture and bonds, lump sale, depreciable asset, long term capital gain under section 112, no indexation is available. Then let us memorize the exemption part. Okay, so section 54, if you are selling residential house property, section 54 we are selling our residential house property. First section is सबसे पहले अपन we are living in our house, so section 54 it is available for individual and HUF. गरीब आदमी residential house और बनाएंगे, ठीक है, बाकी सब आदमी flat rate सब. Okay, so what will that where you have to invest? So for section 54 exemption, you have to invest in new RHP. But on date of new RHP, I had mentioned some note number 1. So this will be our note number 1. When you invest in new RHP, you can claim exemption up to 2 crore. If your capital gain is up to 2 crore, then you can take exemption of 2 houses. But if your capital gain is exceeding 2 crores, then you can claim exemption only of 1 house. But this 2 crore you can claim only in once in a lifetime. You can purchase 2 RHP and claim the exemption under section 54 by buying new RHP. No capital gain will arise. Important, no capital gain shall arise if you are transferring urban agriculture land if 2 conditions satisfied. First, assess the individual and that urban agriculture land is compulsory acquired by government. No capital gain will arise. I say will short will ask in upcoming exams, so take it away in mind. Okay, so this is our section 54. How much exemption is available? Lower of amount invested, capital gain, what are the capital gain, and 10 crores. Okay, and you cannot sell that RHP up to 3 years. Otherwise, what will otherwise happen if you are lapsing that you are selling this residential house property in within 3 years from the date of like purchase of date of construction? So what it will reduce some cost of asset. If it is reduce from cost of asset, it will increase the capital gain whenever you are selling that asset. Okay, so basic logic, I am giving everything from logic. Okay, what will be the time limit? You have to purchase 1 year before. Like I am selling today. Okay, I am investing in new RHP. I had purchased like 1 year before. Like I had purchased in like 1 July of last year. So I can get the exemption of section 54. Or for construction, I got 3 years for construction, because at least a house can take 3 years for construction. If you have constructed that house within 3 years, then you can take that exemption under section 54. Then section 54B. B for how you can remember this. B for अपने बकरी for अपने जो ये आती है like goat को अपन like English students like goat को अपन बोलते हैं बकरी. section 54B, bakri. Bakri means agriculture. It is related to agriculture. So agriculture land. You are transferring agriculture land, and what you have to acquire? New agriculture land, whether it is an urban area or rural area. Section 54B, B for apni bakri. It is related to agriculture land, and SSC will be individual achieve. You have to within 2 years of transfer of date, you have to purchase those are, because a lifespan of for agriculture crop is 2 years, because any crop can be grown in 2 years. Okay, and how much exemption you allow, whatever your amount invested in new agriculture land and whatever capital gain will arise, lower amount you get the exemption. Okay, then come up with 54D. 54D for अपन का दादा दादा कौन है? अमित शाह. ओके, अमित शाह कौन है? गवर्नमेंट. सो गवर्नमेंट इंडस्ट्रियल अंडरटेकिंग कंपल्सरी एक्वायर करती है. डी फॉर जो दादा लोग होते हैं, लाइक जो बड़े लोग होते हैं उनको अपन दादा वादा ऐसे करके बोलते हैं. ठीक है. सो एनी एसएससी कैन क्लेम land and building as compulsory acquired by the data log, like industry undertaking compulsory acquired, but within 3 years from date of purchase or receipt of compensation, you have to acquire new land and building for industry undertaking. We have to purchase the same. Government will allot another land and building, then we have to invest in this, and same amount invested or capital gain, whichever is lower. Okay, and you cannot sell this asset up to 3 years. Otherwise cost same treatment that has done in lock-in period of section 54. Okay, then section 54 EC specified bonds के अंदर there are some there are 4 bonds there. Okay, I will give you the name. Okay, there are some new 2 bonds you have to get from the amendment list. So because it is high probable chances that it will come exam because there is some amendment. So solve the questions of section 54 EC. Any SSC can claim the exemption within 6 months from date of transfer date. Most important, what IC will do, it will take 7 months, take 1 year to invest in specified bond. Then 54 EC exemption is not available. How much amount of exemption? Maximum 50 lakh is available, and or amount invested or capital gain or lower, it will available for the exemption. And you cannot sell these shares or like these specified bonds up to 5 years. Okay, or you cannot convert them into money. Or section 54F for any long-term capital asset except residential house property, because residential house property you are selling if you are selling residential house property, you can get the exemption under section 54. So now agriculture land has done, industry undertaking compulsory acquired has done, long-term capital like long-term land and building has done. And if they, so for rest any long-term capital asset you are selling, so where you can invest? You can invest in new RHP. कुछ भी नहीं, अब सीधा अपना you have to buy your new house, residential house. Individual HF can claim the exemption. It will be same as section 54. You have to purchase 1 year before the indexation. Sorry, 1 year purchase before the date of transfer, or 3 years from the transfer date, or you have to construct within 3 years. Sorry, if you have to purchase, sorry, my mistake. You have to purchase 1 year before the month or 2 years after the date of transfer. But for the construction period, you have got the 3 years. So 1 year, 1, 2, 3, 1 before, 2 for the purchase, 3 for the construction from the date of transfer. This is how you can remember. So 54 there are some calculation. Lower of long-term capital gain multiplied by how much amount you had invested. Maximum you can invest is 10 crore and new RHP divided by net consideration received. This is a full value of consideration, like how much you invested, or long-term capital gain, or 3 years. If what is the lock-in period? You cannot sell it new RHP 3 years. Otherwise otherwise taxable whenever this asset is sold. Okay. So I hope it is so helpful for you. I tried to complete it in the most efficient manner and cover all the adjustments of this capital gain account. Okay, and there is one more, like I'll skip that capital account scheme. You can study from your faculty notes. If investment is not done before due date of filing, and for claiming the exemption, you have to deposit that amount in capital gain account. So how you will going to confuse? IC will ask that before return filing date, it will invest that money in 1 April, but you will think that this is after 31st March, that then we cannot claim the exemption, वगैरह वगैरह. So for capital gain account scheme, you can invest that amount in before filing of the due date return in capital gain account scheme. Okay, and if amount deposited is not utilized for specified purpose, then that unutilized amount shall be taxed as capital gain of previously in which specified period expired. Like it is expired for the purpose of construction. You had invested in the capital gain account scheme, and it will expire after 3 years. So in fourth year, it will be taxable, the whole amount which is unspent. And if individual dies before stipulated time, so that unutilized amount is not taxable in the hands of legal heir or deceased individual. If like my grandfather invested in capital gain account scheme, but he had died in any situation, so this that amount will not be and it has not completed, and that amount is uninvested in any project, so it will not be taxable in my hands. I hope it will be so helpful for you guys. I had completed the entire capital gain with adjustment, and what you have to do is mark them all. I had covered every adjustment. Now you have to solve the practice batch of Jasmeet sir, or otherwise you can solve the PDF which has covered all RTP, MTP, PYQ with the adjustment or with the amendments. So it will be so helpful for you, and thank you so much guys. Now I will come up with the PGP. So let's like, share and comment, and don't forget to mark all these adjustments in your notebook. Okay.